the reason behind the 22% decline in India's exports to UAE in April 2023. India and UAE have been close trade partners for decades, with UAE being India's third largest export destination after the US and China. However, in April 2023, India's exports to UAE dipped by 22% to $2.23 billion, as against $2.86 billion in the same month last year, according to the Commerce Ministry data. This was the sharpest decline among India's top export markets in that month. What were the factors that led to this slump in India's exports to UAE? There are three main reasons: the recessionary pressure on petroleum prices, the impact of COVID-19 on consumer demand, and the trade diversion due to the free trade agreement between India and UAE. First, let us look at the role of petroleum products in India-UAE trade. Petroleum products are one of the major components of India's exports to UAE, accounting for about 15% of the total value in 2022 to 23. However, due to the global economic slowdown and the reduced demand for oil amid the pandemic, the prices of petroleum products have fallen significantly in the international market. This has affected both India's exports and imports of petroleum products to and from UAE. On one hand, India's exports of petroleum products to UAE have declined due to lower prices and lower volumes. On the other hand, India's imports of crude oil from UAE have also declined due to lower prices and higher imports from other sources like Russia. In fact, Russia has overtaken UAE as India's second largest supplier of crude oil in April 2023. This has reduced India's trade deficit with UAE, but also reduced its overall trade value. Second, let us examine the impact of COVID-19 on consumer demand in UAE. UAE is a major market for India's consumer goods, such as gems and jewelry, textiles, leather products, handicrafts, etc. These products constitute about 40% of India's exports to UAE in 2022 to 23. However, due to the pandemic and the lockdown measures imposed by the UAE government, the consumer demand for these products has been severely affected. People have reduced their spending on discretionary items like jewelry, clothing, footwear, etc. This has led to a drop in India's exports of these products to UAE in April 2023. Third, let us consider the trade diversion effect of the Free Trade Agreement between India and UAE. The Free Trade Agreement, FTA, between India and UAE came into effect from May 1st last year, with an aim to boost bilateral trade and investment between the two countries. The FTA covers goods, services, investment, intellectual property rights, e-commerce, etc. Under the FTA, both countries have agreed to eliminate or reduce tariffs on a large number of products traded between them. However, while the FTA has created new opportunities for some sectors like engineering goods, chemicals, pharmaceuticals, etc., it has also created some challenges for other sectors like agriculture, textiles, leather products, etc. These sectors face competition from cheaper imports from UAE or other countries that have FTAs with UAE. For example, India's exports of rice to UAE have declined due to competition from Pakistan and Vietnam that have FTAs with UAE. Similarly, India's exports of textiles and leather products to UAE have faced competition from Bangladesh and Turkey that have FTAs with UAE. This has resulted in a trade diversion effect, where some of India's exports to UAE have been replaced by imports from other countries. To sum up, these are the three main reasons behind the 22% decline in India's exports to UAE in April 2023. The recessionary pressure on petroleum prices, the impact of COVID-19 on consumer demand, and the trade diversion due to the free trade agreement between India and UAE. These factors have affected different sectors differently and have implications for India's trade policy and strategy with respect to UAE and other countries. The sharp decline in India's exports to the UAE in April 2023 has several negative implications for the Indian economy. One of them is the widening of the trade deficit, which is the difference between the value of exports and imports. According to the Commerce Ministry data, India's trade deficit with the UAE increased by 47.5% to $0.92 billion in April 2023, compared to $0.62 billion in April 2022. This means that India spent more money on importing goods and services from the UAE than it earned from selling its products to that country. Another implication is the loss of foreign exchange earnings, which are the revenues that India receives from exporting goods and services to other countries. Foreign exchange earnings help India to pay for its imports, service its external debt, and maintain its foreign exchange reserves. According to the Reserve Bank of India, India's foreign exchange reserves stood at $642.8 billion as on May 7, 2023, down by $2.4 billion from a week ago. The fall in exports to the UAE could further reduce India's foreign exchange reserves and put pressure on the rupee exchange rate. A third implication is the reduced competitiveness of Indian products in the UAE market, which is one of India's largest trading partners and a major destination for its non-basmati rice, gems and jewelry, manufactured goods, and agricultural products. The dip in exports to the UAE could indicate a loss of market share for Indian products due to factors such as higher tariffs, non-tariff barriers, quality issues, or increased competition from other countries. This could affect India's export performance and growth prospects in the long run. Therefore, it is important for India to address the challenges that are affecting its exports to the UAE and explore new opportunities for enhancing bilateral trade and investment relations with that country. As for Commerce Secretary Sunil Barthwal, India hopes to raise its exports to the UAE to $50 billion by 2026 to 27 by leveraging the Comprehensive Free Trade Agreement that came into effect from May 1st last year. The agreement covers trade in goods and services, investment protection, intellectual property rights, customs cooperation, and dispute settlement mechanisms. It aims to provide preferential market access for Indian products and services in the UAE and vice versa. The prospects and challenges for enhancing trade relations between India and UAE in the future are immense and multifaceted. The two countries have recently signed a landmark trade and investment pact, the UAE-India Comprehensive Economic Partnership Agreement, CEPA, which is expected to boost bilateral trade to over $100 billion within the next 5 years. The CEPA provides greater access for UAE exports entering the Indian market through the reduction or removal of tariffs on more than 80% of products, as well as enhanced market access for UAE service providers across 11 sectors and more than 100 subsectors. The CEPA also removes unnecessary technical barriers, supports UAE companies in Indian government procurement tenders, and assures that UAE products will not be subject to India's anti-dumping investigations. However, the CEPA is not without its challenges. Both countries will need to address some of the existing tariff and non-tariff barriers that hinder trade flows, such as customs procedures, standards and regulations, sanitary and phytosanitary measures, intellectual property rights, and dispute settlement mechanisms. Moreover, both countries will need to diversify their trade baskets beyond oil and gold, which currently account for more than 70% of their bilateral trade. There is a huge potential for increasing exports of non-oil products, such as food, chemicals, metals, machinery, textiles, and gems and jewelry. Similarly, there is a scope for expanding trade and services, such as IT, tourism, education, healthcare, and finance. One of the key sectors that offers opportunities for cooperation between India and UAE is renewable energy. Both countries have ambitious targets for clean energy transition and have launched several initiatives to promote solar, wind, hydrogen, and biofuels. India and UAE can collaborate on technology transfer, joint research and development, capacity building, and investment in renewable energy projects in both countries and in third countries. Another promising sector is healthcare, which has gained importance in the wake of the COVID-19 pandemic. India and UAE can leverage their strengths in medical tourism, telemedicine, pharmaceuticals, biotechnology, and medical devices to enhance their health security and resilience. A third sector that can foster bilateral cooperation is digital economy. India and UAE have a strong base in digital innovation and entrepreneurship and can work together on areas such as e-commerce, fintech, artificial intelligence, blockchain, cybersecurity, and data protection. In conclusion, India and UAE have a strategic partnership that is based on mutual trust, shared interests, and common values. The CEPA is a milestone in their economic relations that will create new opportunities for trade and investment. However, both countries will also need to overcome some of the challenges that may arise in the implementation of the agreement. Moreover, both countries will need to explore new avenues for cooperation in emerging sectors like renewable energy, healthcare, and digital economy. By doing so, they can achieve their vision of a prosperous and sustainable future for themselves and the region.